Today I'm going to teach you all about what is a stock's float and why it's so damn important. What's up, Tim Sykes, millionaire mentor and trader here, answering your questions. A lot of people ask me, what is a stock's float? Why does it matter? Why is it important? Well, it is important. You have two things to consider when valuing a company and when valuing the stock to trade. Valuing a company, you multiply the shares outstanding by the stock price. So let's say a company has 6 million shares outstanding, total 6 million shares, and the stock is trading at $3 a share. 6 million times $3 a share, multiply them, $18 million company, right? Pretty simple. Now it gets a little more complicated. What is the float? So there are restricted shares and unrestricted shares. Shares outstanding is total number of shares. So that includes restricted and unrestricted. Restricted cannot be sold for certain amounts of time. Sometimes there's 12, 18, 24 months holding periods. When a new employee joins a company, they get restricted shares. They can't just sell the shares right away. They earn the shares over time. So let's say I'm a programmer and I join a company, I get 10,000 shares that I can sell in 24 months. Those shares are restricted. Restricted shares are not part of the public flow. So let's say, again, you have, what was my example? 6 million shares outstanding, right? And let's say there's 4 million restricted shares. So that leaves 2 million unrestricted shares. The unrestricted shares are the float. So there's 2 million shares that can trade freely. That's the supply. If you know economics, the stock market, a lot of it is supply and demand. So let's say there's 2 million shares that can trade, but obviously some people are going to hold on to them. Some people are long-term holders. But out of the 2 million, let's say there's 1.5 million that are just freely floating shares. Like 500,000 shares are owned by people. They could sell them, but they don't want to. They're long-term investors. That leaves 1.5 million. And again, you don't know how many people are actual long-term investors. All you know is what is restricted and what is unrestricted. But we know that companies have holders, people who invest in the company, people who believe in the company. So the public float is actually less than what the publicly available numbers say. You have to try to guesstimate. If you just want to go with what the actual public float is, hey, okay, 2 million shares, unrestricted shares. Let's say a company with these 2 million unrestricted shares that can trade at any time has good news. They announced a big contract with Apple, and they're a small little crappy software company. This is big news, and maybe this stock is going to trade 4 million shares, maybe 6 million shares, maybe even 10 or 20 million shares in one day when the news is announced. Remember, there's only 2 million shares that could trade. If it trades 20 million shares on the day, it's traded 10 times the float. The float has rotated 10 times. Sometimes the float is 2 million and the stock will trade 50 million shares in a day. That means that it's traded 25 times the public float. What does this mean? This means that there's a lot of demand for these shares. And if any of these people who are selling the shares don't actually sell, let's say they just believe in the company, this company just got a big Apple deal, they take their shares out of the float. They're going to hold on to them. So there's even less supply. And if more and more people want to buy, if there's demand and less supply, the stock price has to go up. The stock price goes up because too many people want to buy the stock and there's not enough sellers. When the stock price rises, it attracts sellers because then, theoretically, somebody might sell a stock at $7 a share because they have a big profit. If the stock was only at $3 a share, they might not sell because they don't have a big profit. So the stock price has to rise to induce people to sell, to accommodate all the buyers. So it's very important to look at the supply and demand. It's not an exact science, but it's good to know what is a low float stock. 2 million, 3 million shares total, that's a very small float. And if it trades millions of shares in a day, that means that there's a lot of demand. The stock could keep going because theoretically there's good news. If there's a big float, let's say 1 billion shares, some of these penny stocks have like 1 billion shares outstanding and the stock is trading at like a penny. It's because the company has diluted the shares, and that's why each share is worth so little. They've raised a lot of money over and over again, selling 50 million shares, selling 70 million shares for pennies on the dollar just because they need cash. I prefer trading low float stocks, but you have to understand low float stocks can move very quickly. So for me, as somebody who alerts my trades, I usually stay away from low float stocks even though they are the most volatile. Partially because I do alert, and it's not good when I alert a stock and I'm like, oh, I bought this stock at 2, my goal is to sell it at 3, and within seconds, before I can even type out the alert, with low float stocks, sometimes they spike from 2 to 3. So on my alerts, I typically avoid low float stocks, because I don't want the stock moving too quickly. I want you to learn in real time. And a lot of people get pissed, frankly, when the stock moves too quickly before I can even type out my alert. But I don't want anybody following my alerts. I want you to learn from my mindset. Why am I entering a stock? Why am I exiting a stock? That's why I stay away from low floats. If you're a beginner, I'd be very, very careful with low float stocks. The stock can move much quicker than you're prepared for. I typically prefer stocks with like 5, maybe 10 or 20 million share floats. That's my personal preference for safe trading. Leave a comment underneath. Let's hear what you think. Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.